Nvidia is moving lower here this morning, pre-market by about 2% ahead of the opening bell as the chipmaker missed Wall Street's revenue expectations in its second quarter results, but did manage to beat on earnings. Take a look at some of the actuals versus the estimates and where that came in at. This is just 2 weeks after the company released preliminary earnings, warning that it would miss estimates. Nvidia cites challenging conditions in the gaming market as well as a slowdown in consumer demand for the miss. The upside for Nvidia, its data center business, which saw a revenue jump of, get this, 61% in the quarter. It actually accounted for the largest portion of their broader revenue pie as well, given that growth that they did see, and also because of the pullback that we saw within the gaming division as well.
Yeah, there seems to be a little bit of concern being expressed by analysts that data center revenue might not hold up, but Nvidia doesn't seem to be expressing that at all. And indeed, on balance, the commentary I was seeing from investors and analysts is that one of them called it a sort of clearing of the decks. That was Melissa Fairbanks over at Raymond James, that obviously we already got the cut from Nvidia a few weeks ago. Now getting this outlook and this discussion of what's going on in the gaming business, even as the company basically is facing a glut of chips, right? That they couldn't get out the door fast enough before, and now they're trying to do that now, which is kind of what's accounting for these dislocations. But the stock is coming off the lows quite a bit.
Yeah, it's getting fiercely defended on the street. The street loves Nvidia. They love everything about it, and they're willing to give this company a pass. Some of the folks out there are just looking at the notes and catching their vibe. They would have liked to see Nvidia, I think, guide down or take their revenue estimates lower on the data center business. But still, I'm looking at a good note from the Citi analyst team there, lowering the price target to $248, but pointing to a potential catalyst for the stock at a chip conference they're going to hold on September 20th.
Yeah, that's their big GTC conference.
GTC conference, where they might unveil some new gaming products. So the street is seeing some potential catalysts here, willing to overlook a write-down of over $1.2 billion. I mean, that was just a huge write-down.
Yeah, at that GTC conference, they're going to talk about some of the new advances within RTX. They're saying breakthroughs in AI that they've made will also be discussed there. And the metaverse. We haven't had a lot of metaverse chatter recently, but the metaverse is going to be discussed at the GTC conference. And this all kind of pulls back into, for gaming right now, what they were talking about within the call, some of the investments that they've made within gaming too. The decline in gaming GPU revenue sharper than anticipated. Yes, but this is also at a time where they did see even more of that growth in the GeForce Now usership, and ultimately that registered member pie has now grown to about 20 million, adding 80 more titles in this most recent quarter.
And there's also now some chatter that, much like in retail, there's discounting expected, that maybe folks who depend on these gaming rigs will be able to get them at a lower price, although that's not clear if that's the read-through, but that's something that's being talked about.